would you be a buyer of stock, or are you looking at it for a potential buy and looking at this as a turnaround story in a few quarters' time?
Hey everyone, welcome to this TDR Cannabis Exclusive. Big news here today as we bring in a big name guest. He's been on our podcast a few times to dive into these numbers of Canopy Growth last week. No better person than, I love this title, the self-unemployed legend, Bruce Linton.
I think you added the legend part, but okay.
Good to see you, sir. How are things?
Well, I knew I was talking to you, so I put like my...
This town is dope.
Smith Falls, Ontario, baby.
Hello, Canopy.
Yeah, no, Smith Falls,
reminder.
Ontario. Now they're stroking out the D, and they're turning it into hope.
Hope? Is that the case?
They hope somebody will see the fact that the cannabis sector is, in fact, pretty goddamn awesome if you execute.
Yeah.
Right? Like they understand that the sector, what is it, 3-4 years ago was what, 1.6 billion? And now it's 4.6 billion. So like that's like, if you take that growth curve over the 4 years, that's a real chunk of incremental growth, which should result in more employment, not less.
Absolutely. Good point. Lead financial writer Benjamin A. Smith joins us. Ben, good to see you. How are you, sir?
I'm doing very well, but it's really hard to compete with Bruce's opening, so I'm just going to say doing well. I look forward to the conversation.
Maybe we should change that D in TDR to H, the Hope Report. I like that, Bruce. All right, let's dive into it. I know a lot of people would like to hear your feedback. So last week, Canopy Growth reported third quarter fiscal year 2023 financial results. Numbers were not good. Net revenue, $101 million in Q3 fiscal 2023. That declined 28% versus same time last year, and 23% included in divestiture of C3 and Canadian operations. Gross margins were negative, down 7% over the previous 12 months. There was also softness in the sales to most of its businesses. So first question, Bruce, what's going on here?
Well, clearly they're selling less cannabis in a market that grew.
Yeah.
So if you're selling less in a market that grew, that means people are taking your market share, and regrettably, it isn't a new thing, right? There was a time when more than 1 every 4 cannabis products sold in Canada was a Canopy product.
Yep.
Now, what is it? 3 in 100? 5 in 100? I have no idea, but it's not 1 in 4. And so it wasn't I suspect...
Like, is the product not good? Like, what is it? Why are they not selling?
Usually these sorts of things are regrettably complicated. But the net result is that it's the same as every business in the world. If you are not growing, you are dying. Yep. And if your situation is such that you're down 23%, if you actually think, well, I lost 23% of my top line, you have to cut more than 23% of your bottom line, because your bottom line is supposed to include a profit, not just the cost.
Okay.
And so what you start seeing are big cuts, and then that feeds, and these aren't the first cuts, right? These are probably the 5th cuts, because this is not the first quarter. I don't know, are they at 11, 12? How many quarters in a row that sales have declined? And so when you keep cutting, first you say, well, we don't really need a marketing group. And then you say, we don't really need like a product innovation group, and we don't need a medical group. And we don't need, and as you take these costs out, they come with consequences which do show up in time at the top line. And it's not Canopy. This is business 101, right? Like sales minus expenses equals profit or loss.
Yeah.
If you insert in the first space called sales a declining number, you have to cause a declining number in the expenses to have any chance of having profitability in the final one. And I'm not sure you can get there at this rate, but that is regrettable. But what causes people not to buy something? Like, has the origin story been lost? Well, they closed, I think, 3 years ago when COVID started? Let's close our stores, but let's also close our visitor center. But is the visitor center opened again? No. If you want to build a brand, bring people to a place where they used to have several 100,000 people a year go on a Hershey tour. All of those people are now old enough to buy cannabis. They went on that school tour of the Hershey plant. They come back, they connect to the brand. All these little things tie back together to be a brand story.
Yeah.
Because at the end of the day, you can say, well, the product's not good. Okay, well, what does that mean? There's a whole bunch of categories. Do you not like any of the milligram denominated products? Do you not any like the pre-rolls, specifically what's going on? And it becomes like kind of like the sector, right? Where a lot of people says, oh, the cannabis sector in Canada is terrible. Well, what do you mean by that? Like when you actually get into the facts, it's not. And I don't think the Canopy products are terrible. I think probably they just got to be on the negative side of the conversation.
Well, I'll let you jump in right after this, Ben, but you make a good point about, is there a surplus in Canada? Is the market terrible? Well, you bring up, I want to bring up competitors like High Tide are seeing tremendous growth right now. And as you said, how many quarters in a row have we seen decline in sales with regards to Canopy Growth? So it has to be more than just this quote unquote Canadian market, do you not think? Go ahead, Bruce.
I thought I was leaving that to Ben, but you guys broadly covered. Like I watched Aurora announce their quarter the same day, right? High Tide's
Yeah.
up. Aurora, I think, was up 25% year over year.
Yeah.
So it's, to me, there's always, I don't care if it's the auto market, the cannabis market, the whatever market, typically there's a dynamic, which is who's taking market share. And that dynamic has been strongly at play, much to the regrettably detriment of Canopy. Like
Yeah.
Aurora, I remember that company vaguely, but they were so far behind us, I couldn't even see them in my rearview mirror. Right?
I
And
know.
now they're up 25%. You keep going down and they keep going up. Before you know it, you're looking at their taillights.
Yeah.
Now,
Yeah.
Bruce, you mentioned in your previous response that Canopy is cutting this and that, and all of a sudden, not all the parts are there to make the whole business. So, as part of the latest financial results, the company announced a cost cutting program, which is essentially going to reduce headcount by about 60% across the whole business. And this is expected to see savings of about $140 to $160 million from their operations. So my question to you is that, is it reasonable to believe that Canopy can operate similarly as before and be considered an industry leader with all this cost cutting taking place? And also, does it break your heart to see the Smith Falls cultivation facility, which was the company's flagship facility when you were CEO, shut down completely?
Well, so kind of three things there, actually. On the first, people will correctly say, well, they're cutting a lot. That means this thing was big. Well, this thing was built to be number one or two in every category on a global basis. Right? I didn't have like this, I'm from Canada, can I please come in sixth mentality? No. This was designed to be a globally relevant, intellectual property generating, market share owning, top position, one or two in every market. That size of an aircraft does not operate well when you want it to become a Cessna.
Right.
So I don't know how to make a globally one or two market position, intellectual property, science-driven entity into a small aircraft. So I don't know what that would be like. It kills me for Smith Falls in that it's a really, it's one of those classic towns which the way that many people introduced it to me is they used to do this in Smith Falls. We used to make press records. And that was that building over there, and we made like the first Beatles pressing in North America. Okay, is that business around? No, it's gone a long time ago. We used to make chocolate. And so they're not leaving Smith Falls, they're moving across the street, but they're leaving all of the Hershey assets.
Yeah.
And I'm sad because if they said we're going to sell it instantly, I think that building has three potential buyers, meaning three separate businesses. The southern end was built in order to be designed so it could meet what I would call like a pharmaceutical grade production. So you could make medicinal pharmaceutical products and export them to, say, Europe or the US. That would have a number of natural buyers. The large facility where the grow rooms were, well, it was the initial place we grew. My theory was that over time, we would jettison all production into, when I say jettison, that means sell it into the appropriate hands. So they would grow the cannabis and we would process it. And the value of the business is in the processing and presentation in a branded and formulated model that things people want to buy. But you had to build your own production because there was none available. There were no cannabis available if you didn't build your own production. Those assets will have paid for themselves multiple times over that were produced in Smith Falls. And then the other end of the building, like there's two great labs in there. There's and I would call it formulation capabilities that would be very interesting for anybody from mushroom and sort of that whole world, right through vitamins, and why not make baby formula there? Like there's a bunch of uses for these buildings, but my concern is it's going to take a year till they're out of the way, and then the town loses the population that moved there to work in these buildings, which were people with some advanced degrees and some people with advanced experience.
It's pretty clear, though, when you look at Canopy, Tilray. Tilray announced like recently that, they're not going to come out and say this, but obviously overestimated with the size of facilities that we're building, and they're flipping a lot of their, I think, the one location into produce, which is quite common in the town of Leamington, Ontario, Canada, which produces a ton of produce there. But is it not pretty clear that these bigger Canadian companies, these LPs, it's just all about the U.S. now, their business plan, or you wouldn't go that far?
Well, I think it's a good topic, but what's happened in the U.S. that was positive? Like in December, Schumer and no one could get safe banking passed in the everything moved through the House in December. It got parked.
Yeah.
So the U.S. doesn't even have safe banking, which was everybody saying is for sure going to come in December. So my worry is that every minute the U.S. operates under its current system, it gets much more entrenched for the current participants and much more difficult for federal regulation. The place where I think federal regulation is going to start, I think, is that the people who are 65 and older who want to have medical access, there will be something for that because it's a natural division that doesn't cause the same political rift.
Yeah.
And that might usher in a multi-stage method by which regulation occurs, but I don't see anything on the short-term horizon that tells me America is becoming an open market.
I know. It's become even more and more complicated. We've talked a lot about this, right, Ben?
Yeah, absolutely. And I actually wanted to ask Bruce, I know Canopy is trying to build out a subsidiary called Canopy USA to try to get into the U.S., which is an amalgamation of certain brands there. Now, do you think they'll be able to do that and still keep their TSX listing? And also, was that something that you looked into when you were CEO of the company, or was that kind of before its time?
No, I had a deal with Acreage, and I had about $5 billion with almost no debt. TSX would have let us stay. They will let them stay. Worst case, back then, I would have had to go to the CSE, but the TSX would have let us stay. No, I don't think any chance NASDAQ or NYSE lets you stay. But why wouldn't you just jump in with $5 billion on the books? Acreage signed up to be, at that time, 17% of the essentially the value of Canopy, and use your cash. Because remember then, 4 years ago, what was principally scarce still in America? Cash.
Right.
Balance sheet strength. That's come and gone. It went out of vogue, and now we're back to very skinny balance sheets, but that's for everywhere.
Yeah.
So no, I was a big fan of the idea that once you got the money, honey, let's jump in the market and lead when there isn't. It was, Curaleaf has become a very strong player. GTI is a very strong operator. You start looking around, like Trulieve may have been beaten up, but I was just down in Florida. There's a lot of market coverage by a lot of these players that I don't know how you get in front of them now.
Now, let me ask you this: given the Acreage operations, and given that they're still profoundly in the red, do you think it was almost a good thing that Canopy did not acquire those operations and sort of waited until this time?
Well, I think everybody's officially going to be in the red until they do something with 280E. But if they had, imagine if your balance sheet had $4 billion US, 5 billion Canadian, what would their operations look like? A lot more scale.
Yeah. When
you scale, you start to cover your overheads. But if you're starved of cash, which I think was largely the basis upon which the deal was redone, to make it not 17%, but 8.5%, I think is the right number. When they didn't have cash, but they idled and were stuck after Murph and I did the deal, I think it was kind of like a 2-year desert for them. That is not a great way to crank things up. It's a great way to let people get running while your shoes are tied together.
Yeah. Kind of an open-ended question, but do you think Canopy can achieve positive EBITDA based on a lot of the reductions that they've announced? history has shown the last 12 quarters that, prove to me that that can be accomplished. But that's a question we may not be able to answer right now.
I just think that if inside the shop the conversations are constantly about cost, no. But if inside the shop the conversations are almost constantly about market share and what makes people buy, what's the segment we're going to first step up on? Why can we win over everybody else in this segment? You know what I mean? You got to turn the trend line from down to up on sales.
Yeah.
When you do that, you now start to gap out on your cost base potentially because you're going up. And like I look at look at Bina that went over from Supreme to run Organigram. Mm-hmm. She went into Supreme, which I like the guys, but it wasn't much. There wasn't that much going on until she came in and put it back together in a different way. She sells it to Canopy for what, a 66% premium to the last trade. That's a hell of a premium, man. Yeah. But then she's free to go, and she goes to Organigram. How's Organigram doing? Really well. What did they announce in the fourth quarter? I think they said we've doubled our production assets. So you gotta drive sales. Bina drove sales. It's not pure magic, but if you drive revenue up, and how many quarters can you continue to lose market share when the market's still growing?
So why are they not like we talk, and I've had a lot of conversations where there's a lot of quality people that have left this industry. And I think there's a number of concerns as to why. Obviously, a lot of hurdles to jump through regarding Washington, but you bring up a great example on the level of talent that has a great track record. Like, why would you not, my understanding or reading this wrong, but why would you not identify that?
I don't know. Why would you pay a 66% premium to a company that's run by a person who transformed it and then let that person not have to stay with you? Mm-hmm. So I do think there's a way to grow sales. There's many ways to grow sales, but I don't know the cuts are the way to grow sales. You got to cut when you don't have sales. Maybe things are too big, but if you were interviewing them, the real question would be, guys, you can't just grow sales. Mm-hmm. You have to pick a target segment. You have to think about why you picked it. What are the attributes of your company that you think you have an advantage in making that segment your segment? Who are your competitors, and how are you going to annihilate them? And once you do that, you do the next segment and the next segment. And typically, you go from one thing to the next adjacent group because the adjacency is kind of where you already have some kind of related expertise. Mm-hmm. And I don't know how that's being tackled, but profitability to me tends to often be the result of growing sales, not growing cuts.
Now, in the fourth quarter last year, Bruce, I found it kind of interesting that Canopy divested their Canadian retail operations altogether, right? And that struck me as kind of crazy in a way because, here was a company that was supposed to have the biggest branding advantage, although obviously most companies are hamstrung in marketing in Canada. But was that sort of like an admission to you? Do you look at that as an admission that Canopy, just for whatever reason, cannot operate a retail outlet chain properly or profitably in Canada?
Well, given the rules, you're indirectly operating when you're an LP. You know what I mean? You're not really driving them, but I was a bit surprised in that when you're indirectly driving, it doesn't mean that you don't get disproportionate representation of your product in those spots. So if you actually have a presentation advantage, you would think that might help you have a sales advantage. The party that bought them doesn't have to operate on a disconnected basis, and their principal I think was the guy that owned Rexall. So they have a long history of building retail. So probably in the other party's hands, that's something that they could do directly and more aggressively. The question that will never be answered is, what are the terms of the acquisition? Right? Maybe, Ben, if I sold them to you, but I wanted you to have a high priority on my product, however I could do that within the rules, maybe selling them's not so bad as long as you still get the goodies.
Yeah. What were your thoughts? Big, obviously, direction where a lot of these big MSOs in the States are going this year. It's not about market share. It's more about profitability. You saw Curaleaf make that announcement, walking away from a few Western states, including, I think it was California and Oregon. Air Wellness walking away from a dispensary in Chicago. This is going to be front and center this year, which is a big trend that we will see materialize. But how do you there's no real sign that legislation is going to move anytime soon within Washington. But if you're a CEO of a big multi-state operator, like, what are the top 2 or 3 things that you need to focus on right now?
Well, you hit one of them. Like, you couldn't give me a business in California in this sector. Like, unless you want to sell at the back door and the front door, I don't know how you make any money in California given the weak regulation, zero enforcement, and prevalence of illegal shops. And so, like, California is super hard. Second behind it, probably Oregon, right? Like, so like I think a lot of people were putting pins in the maps to say that I'm everywhere. But the reality is there's some states that are fantastic to be in. Like, have you heard about anybody running away from Pennsylvania?
No.
Not so much, right? So, like, I think what you're going to see in Florida, like, you're going to start to see concentrations in geographies which have regulations that allow a business to vertically integrate and create value. And that the regulations make it where the state wants the state system to work. California is like being in British Columbia. They can't decide if they like the new system or really like the old system. And so I find the left coast is kind of hard to deal with in terms of the sector, both in Canada and the U.S. Because remember at the beginning, how long did it take till you could actually buy legal cannabis in a store in British Columbia?
I know.
Oh, we have 2 of them. Oh, that's terrific. Isn't that's really stretching it, guys. So, like, I just think you're going to see MSOs really pick up on the markets where they go. But frankly, none of them can really easily be really, truly profitable when they're still having no deductibility of the operating expenses. Like, probably the top 5 would all be massively profitable if they actually could deduct normal operating expenses as every other entity can before they pay taxes.
Yeah, and you've said that a lot, Ben.
Yeah, absolutely.
Well, it's high. Like I always explained, it's exactly, people go, why do they have it like that? I said, well, do you think Al Capone could deduct the cost of his fuel and bullets while selling bootleg whiskey? No. He had to pay tax on the whole. It's like the bank robber. Well, I'd like to deduct the cost of the bullets and the mask was expensive. Like, no, you can't deduct that. You just got to pay taxes on your top line revenue when you're doing something federally illegal.
Yeah. Well, listen, appreciate you checking in. Is there anything else you want to ask, Ben?
Yeah, I was good. I was thinking about asking Bruce a kind of on the spot question, Bruce. So feel free to answer this or not, but I'm going to ask it anyway. So after the Q3 2023 earnings, the company has about $789 million in cash, I believe, in cash equivalents. So, would you be a buyer of Canopy stock if you are just a regular retail investor, which you are now? You're completely divested from the company. Would you be a buyer of stock, or are you looking at it for a potential buy and looking at this as a turnaround story in a few quarters' time?
I probably. So I haven't bought or sold or done anything with it, period, in the last, I think, year at least. I right now would probably be a watcher for at least another quarter, because if they have to service the debt, right, they're a net debt company, how much of that's going to be done through equity issuances and how big will they have to be? So that's, show me your revenues are going up, because then I believe your cost of capital is going down and the total quantum of issued equities, I'm not going to get diluted like 2 to 1. Those are the kind of the sequences. So like if I went in the stores and started talking to people and all of a sudden Canopy had a segment they were starting to dominate the shit out of, I would start to think about maybe buying some of the stock. And then the stock price goes up, I would buy a bit more, because I think now the dilution effect to service the debt isn't going to be so, just completely demolishing.
Right. So the canary in the coal mine is first get sales up, pick up sales despite the headcount drop. If they can pick up sales or dominate a segment, that's what you'd be looking for to invest in the stock.
100%. Just turn any corner that turns the revenue number from a downward arrow to an upward arrow.
Got to do it.
Hey, guys. Thanks. I get to go and talk to some bankers now. Be well.
All right.
Bye.
Thanks, Bruce.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel, because we would not be here without you. Thanks for watching, everyone.